Welcome everyone to this panel on the future of Europe's capital markets and wholesale payments. I'm John Orchard, OnFIF's CEO. This is an interesting domain, which in this geography is perhaps more immediate than retail CBDC. We just heard an excellent discussion on the whys and wherefores of introducing that. There are tricky issues in wholesale too, though not just technical ones, where there's excellent progress underway, and we're going to hear about that. But also regulatory, including complex issues around redefining the distinction between money and securities, among many other issues. We've got a very experienced panel to discuss this with today. Claudine Herman, Director of Infrastructures, Innovation and Payments at Banque de France. Aniko Zombati, Chief Digital Officer at the Central Bank of Hungary. Dirk Schrader, Deputy Head of the Payments and Settlement System at the Deutsche Bundesbank, and Naveen Mallela, Global Head of Coin Systems, Onyx by JP Morgan, and we'll explore that system as well. It's part of what I've just described. So thank you all for joining us. We'll get stuck into our questions in a moment. I would invite the audience as well to pose yours. We'll introduce those into discussion wherever we can. But first I want to run a poll question, and I'm going to ask it again at the end to see if attitudes change as a result of the discussion. So the poll question we're asking, so please do vote. Hopefully you can see the poll slide now. Should payments, public money and capital markets be upgraded at the same time on an integrated DLT network? Sounds arcane, but isn't. It's quite an important discussion, as we'll discover. So yes or no to that. We'd be very interested to see what you think now, and then we'll ask it again at the end to see if attitudes change. Either you become more enthusiastic as you hear about the opportunities, or you become more concerned potentially about the risks, as there are obviously both of those things. So welcome again, panel. Very nice to have you with us. CBDC and digital payments are frequently spoken about together, and we've done that today. Of course, they're not the same. We'll explore the broader digital issue later. But firstly, what are the ECB and its component banks working on with respect to wholesale CBDC? We know about the 5-year consultation. We heard that earlier. But what is specifically going on in wholesale? And I know there are separate exercises in some of the member banks. And let's explore in what ways the Eurozone differs from other currency jurisdictions such as the US and China. The ECB, of course, is a central bank for an entity which isn't a unitary state, so it's a little different. So perhaps we could start with you, Claudine. You are part of a bank which is a member bank of the ECB. What's the ECB looking at for wholesale and also the Banque de France? Because I know you have exciting projects there too. You're on mute at the moment, I think, Claudine.
Is it better?
Yeah, there we go.
Can you hear me? Yes, sorry. Yes, regarding the digital euro, you probably know that the investigation phase was launched for the retail digital euro, which will take 2 years. However, I mean, some work has been started. I mean, among the central banks to explore as well the possibilities of using the DLT. So this is an interesting work that has been carried out and which is still being carried out. I mean, regarding Banque de France, we have been launching and doing some experiments over a year and a half now, and you might have seen that we published a report on the 8th of November related to the results of our experiments. And really the approach is more like having a learn by doing experience to explore the various use cases and the different technologies that could be explored. Well, certainly regarding the approach, I mean the work on the wholesale CBDC has not yet been formally launched by the Eurosystem. Still, decision has to be made upon this. And also the approach might differ according to the strategic priorities and to the currency areas. in the euro system globally. I mean, as for the retail euro, the approach that has been taken is to really examine the use cases that can be possibly be injected into the project, to examine the demand, and so to also to involve all the actors in the landscape to ensure that the ecosystem also adheres to this possible new currency. So, well, in a nutshell, this is. I think wholesale CBDC is a big issue to preserve the anchoring role of central bank money, and that definitely this wholesale project is very it's quite crucial to preserve this role and to also develop it.
Some would say wholesale CBDC already exists in the form of RTGS style systems. We can come back to that in a moment. Just briefly, Claudine, before I go over to Dirk for his perspective, also perhaps on the incoming governing parties in Germany and their approach to the digital euro. Claudine, do you think it's possible to divorce a retail from a wholesale CBDC, or do they need to be created in tandem?
Well, the choice that has been taken by the euro system has been to put the focus primarily on the retail area, so as to focus more especially on the end users, the companies, the corporates, and the citizens. This is why it's important to have the citizens and the general public to adhere to this project. However, there is a case also for the wholesale CBDC, for the interbanking settlement, and also for cross-border settlements, which could be greatly enhanced with a digital wholesale CBDC. So they can go separately, possibly, but there surely, I mean, we think there are some synergies that can be exercised, and so that the two could possibly be explored either at the same time or on a kind of a roadmap, but both have to be examined.
But and you may or may not have an immediate answer to this. Do you think it's possible, for example, that a wholesale CBDC might be created and not a retail one? Or the RTGS system is upgraded and described as a wholesale CBDC?
Again, I mean, it really depends on the use cases, because really the CBDC should stem from the demand of the market and of the citizens. So these two cannot be, I mean, the demand from the market has to be the primary, let's say, the primary goal to achieve in using both the retail CBDC and the wholesale CBDC. And then, let's say, I would say maybe, yes, it's a personal view, but then concerning all the infrastructures, this is a project that can be flexible and that will have to adapt according to the demand. And we know that demand is changing as well. The use cases might be changing, so it's important to have a model which can evolve over the future.
Okay, thanks, Tony. Dirk, anything to add from your side, the Bundesbank's perspective, or specifically on wholesale? Bearing in mind on the retail side, we know actually German citizens are quite reluctant, based on our polling, to adopt a retail CBDC. There may still be a case for a wholesale one for various reasons. What's your view on the Bundesbank's work here, but also the ECB's?
Yeah, thank you very much, John. So in case of putting this into question, so that is my personal opinion, just to be clear.
Please.
So on the one hand, you have the retail CBDC. I will not comment so much on that.
Yep.
I think we have to present also, I think, more concrete ideas to the public. I think the reason in Germany why this is not so well received perhaps here in the for the consumers is that they are not really know what is the value add. And I think that is also that what should be done in the next 2 years. With regard to wholesale, I had a meeting and a panel discussion 1 hour ago. There was the topic was the new opportunities of the tokenized world. You know that in Germany, like in France, for example, it's now possible to issue digital securities. And I think we have to take care of that. And therefore, I think it is really an imperative for us also to look at this. That being said, you said, are there any impacts on the retail? I think that what we are looking for is professional financial market actors, banks. But for sure, when you look at the DLT systems, you see that the question of access will immediately come into play. Smaller value chains, shorter value chains means that intermediaries are cut out, that end investors might participate directly. And that are those issues, I think, where we might see a mixture between this discussion on wholesale and the discussion on retail. That being said, I think it should be important for the central bank not to put the financial stability at risk.
Right.
I think quite clear that, for example, corporates and a number of other clients are served by banks and commercial bank money now. So we might have to see that this might also continue. The second point is we see a number of different ideas, but what we do not see a common vision of the market. So you see a lot of pilots, you see a lot of small-sized projects, but the question is that really the way to have a market infrastructure fully fledged? And I think that will take time. And from our point of view, for sure, it should respond still to the need to settle in central bank money, in particular financial market infrastructures. I think that is an asset which must be protected, but at the same time, we should avoid fragmentation. And that is a little bit the problem what we see. In any case, that will be a very complex travel which we have to do. And therefore, we believe, as Claudina said, we need a flexible approach. And that what we believe is that perhaps at least for the short and medium term, it might also be possible to serve the market need by bridging or trigger solutions. So building connections between asset chains, new innovative asset chains, and the traditional payment systems.
But can you imagine, Dirk, for example, tokenized capital markets in some way backed up by wholesale CBDC, but there's being no retail CBDC at the same time?
If you ask me personally, I could imagine. I'm still in the old world, so I differentiate that what is relevant for the merchant, for the consumer, and on the other hand, for the banks, for the parties in the financial market infrastructures. I still believe that are different still environments, and I believe that we will see a certain distinction between those two areas also in the next few years.
Right.
That is at least what I believe.
Okay, Naveen, you've done a very interesting experiment in this regard, and we'll come to you in just a moment. But Aniko, obviously you're not in the Eurozone, but tell us about your thoughts for Hungary and other partner banks of the Hungarian Central Bank, specifically on the issue of wholesale, setting aside retail for this particular panel.
Okay, so as you said, we are all alone in moving ahead. That makes significant freedom, and we of course want to enhance the customer welfare, and for example, in the retail area, we just introduced the instant payment system, which is obligatory for all market participants, meaning that in the retail area, we don't need an instant solution for any digital payment facilitation, even though the Central Bank of Hungary wants to be in the forefront of research on CBDC. But indeed, on the wholesale area, we see a lot of room for improvement to help the banks to transact faster, cheaper, and of course, more transparent way. And that's why we are exploring all the possibilities to participate in international projects. And along these lines, we approached the BIS Innovation Hub network, and we became partners of Project Dunbar recently as observers.
Okay, just very briefly, supplementary question for you, Anika. Can you imagine, in this case of Hungary, for example, let's say that a wholesale CBDC is created, not just for the existing commercial banks, but for new payment solution providers. They may be narrow banks that look like stable coins and vice versa. Can you imagine those entities being plugged into a wholesale system that you create alongside the existing players?
Definitely, I can imagine. First and foremost, because even our instant payment system is open for not only for banks, but for other payment service providers like Wise, and for other fintechs are already members. So we are not in favor of any specific market participants. We want to have an efficient market overall.
Okay, thank you. Naveen, you've been part of a very interesting experiment involving CBDC and commercial banks settling also across currencies, and that addresses lots of issues that come up frequently in our CBDC discussions on interoperability and so forth, counterparty risk. Can you talk us very briefly through your experiment, as I think it's relevant for the discussion here before we go and look at the applications of digital assets more broadly?
Sure, John. Thanks for the question. To just add on to the excellent comments made by my co-panelists. So what we've done with the recent experiment that we conducted, we were privileged to be part of, along with Banque de France and Monetary Authority of Singapore, where JP Morgan Onyx provided the infrastructure, was to see how CBDCs, and specifically wholesale CBDCs, could solve some of the friction of cross-border payments. And just generally to set the context, right, if you look at today's world, domestic payment infrastructure has improved by leaps and bounds, but lack of interoperability between these domestic payment infrastructures means for cross-border payments, you're reliant on correspondent banking, which is where the friction around long payment chains, interoperability in terms of data standards, cutoff times, all of that come in. So with wholesale CBDCs and with corridor networks, where you have multiple central banks coming and issuing wholesale CBDCs, means that you can transact on central bank money rather than commercial bank money. That in itself will shorten transaction chains. That, coupled with 24/7 always on infrastructure, means that you have the ability to address a lot of the friction points, which is always talked about. So that's what we participated in from a simulation standpoint. How could commercial banks use a digital euro and a digital Singapore dollar to facilitate cross-border payments? That's the first thing that we proved out. Second thing was in terms of taking out settlement risks. If you look at CLS, there is coverage of 18 currencies, but adding more currencies is a bit of a drawn-out process, and settlement risk is on the rise. Especially, Aniko talked about Project Dunbar, where you have the likes of Bank Negara in Malaysia participating. A number of the countries here in ASEAN, those currencies are not covered by CLS. So what we also explored as part of this is corridor networks and the ability to execute FX PVP, the ability to take out settlement risk. What does that do? And finally, probably the most interesting part of the experiment was leveraging some of the decentralized finance protocols like a Uniswap. Take a Uniswap and instead of crypto, use CBDCs and see what the automated market making looks like and what does that do to OTC FX processes. So these three areas are where we think that a number of pain points could be addressed by Corridor Network. While this was just an experiment, we can talk about Partier a little bit. We are already looking at taking that experiment forward in a commercial way.
In your excellent paper about it, you're quite open in the conclusions that there are still things to be solved, even beyond the competences of the people here. There are social and regulatory things to be addressed as well, as we know, and we'll come back to those. And I think I'd like to spend a bit more time on how it works, automated FX, and so on. Sounds very interesting and difficult and useful. I just wanted to quickly go back to a first principle question that is raised by Naveen's experiment, I think, which is what we're actually trying to solve for. So I'm keen for you all to engage with this. We, in our discussions about CBDC, often get stuck on the things that Naveen's just attempted to address in the experiment. So interoperability across borders, in particular, supervision. Who is the final regulator for these transactions? Who collects the data, and what level of information should they be allowed to see? And that cuts across retail as well. We then get the statement often that why are we trying to do this? Because it happens already. Commercial banks, SWIFT, and others can already move money between regions and currencies from one end of the world to the other. Some say they do it too expensively, but they do it. So let's explore the first principle need to add cross-border CBDC channels. What do we need to do that for? I'm turning to you first, Claudine. I can't hear you. I don't know if anyone else can. Yes, you're back.
Yeah. Okay.
Yeah, far away.
So regarding more specifically the cross-border payments, certainly, I mean, as the G20 highlighted, there are a lot of frictions to be solved regarding the efficiency, the cost, the time which is needed to make the necessary transfer from the sender to the recipient. So surely there is a path for improving, and probably a digital CBDC could probably improve the process. So this is one of the paths that has been explored by Banque de France in its experiments, and we intend to continue. Surely, I mean, what we noticed from the experiments that were conducted, and so one of them being with the MAS and with JP Morgan, was that indeed we have noticed that efficiency can be greatly enhanced by using new technologies and by using a CBDC. The time to process the transactions could be drastically reduced. The transactions could be processed with a complete security because it's settled eventually in central bank money. So it's one of the things that central bankers, we are very much attached to, which is the safety of the settlement, of the ultimate settlement. So this can improve also the safety. And so there are many benefits in exploring this path. There are many intermediaries. So we perhaps, I mean, now is the time also to rethink how we can render the system more efficient, how we can enhance these cross-border payments, because they're very much important for, I mean, the populations, for example, also regarding remittances, this area could be improved. So certainly, one aspect that has to be explored is obviously the topic of fragmentation. If we build or if we conceive some platforms or if we have some interoperability, we have to be very much aware that we do not create a fragmentation, and we do not have some liquidity pools which are trapped.
Okay, well, that's I think that's a very good reason. Would you agree, Dirk? Is there a need for the official sector, the public sector, to put a lot of effort into duplicating a system that the private sector has already answered?
That's a $1 million question. No, I think, as Claudine said, there is the need to improve cross-border payments without need or without any discussion. And I think it will need some public intervention, because the other systems are good, they are developing, but we are not there. And I think it will be very difficult to reach very ambitious objectives and aims. So the question is, do we need for that wholesale CBDC? That was one of your questions.
Yeah.
It's quite clear. Cross-border payments have multiple facets: the communication protocols, standards, regulation, compliance. So that is a little bit outside. That what I see in the papers also from Naveen is that we are speaking of making the correspondent banking more efficient.
Yeah.
There are new possibilities, as already outlined, in a way that you have everything on one platform, that you are able to do the transaction really real time across currencies. That is, I think, the question is, do we need a wholesale CBDC for that? I'm not so sure, because in the end, when you look at the different models, could also be a digitalized correspondent banking. So there, I'm not so sure. And I think in one of the papers, I think also from Naveen, you could save 80% of the cost of correspondent banking. So if this is in the end good, if this is the result, then it's good. But I think we need to see how we could do that. But for sure, it is worth looking into that aspect.
Could I simplistically summarize you, Dirk, as saying, if the current disruptive pressure leads the existing system to be more efficient and cheaper, you would be happy with that?
Yeah, for sure. But as I said, I think disruption means that we should really not touch upon financial stability. That's quite clear. I think central banks, being the monopolists in cross-border payments, I'm not so sure whether this would be the first best solution. But as you said, if there are inefficiencies and if there are better ways to improve it without really putting the financial system at risk, or the sovereignty of the own currency, that are all those issues, I think, which are a little bit open. And I think in the end, we should also see technically a lot of things are possible, but I think we also have to do it in a framework with rules. And that, I think, is sometimes a little bit more complex.
Okay, well, we'll come on to explore DLT in a minute. I think that's very important. A quick supplementary question I've had from the audience, which is another version of the same thing, I think. Question from Keith Baer, fellow at the CCAF University of Cambridge, who says, to what extent does a modern RTGS negate the need for a wholesale CBDC? I think that's essentially the same question, Dirk. What would your answer be to that?
So first, I would say that what we have today, for example, in Target 2 or in FedWire, that is not CBDC. That's digital central bank money, but it's not CBDC, not wholesale CBDC. So as I said, I think it's one of the possibilities is to link a modernized conventional payment system with new innovative asset infrastructures. And if we consider 24/7, I think that will be the future also for RTGS, perhaps not next year, not in 2 years, but in 5 years' time. I think that will be the final solution also for that. So, and indeed, a lot of people speak of atomic settlement between two DLTs. Why don't we do an atomic settlement between a DLT system and a traditional powerful payment system? So, therefore, I would agree that this is a promising road to pursue. On the other hand, I think we must also look more in the medium term whether there are additional value adds if we would go into the direction to issue really wholesale CBDC. So CBDC, central bank money directly on a blockchain or DLT basis. So I think that is more a complex issue, which nevertheless we would have to address that.
Okay, very briefly, Claudine, I'm going to go to Naveen because he foresees, I think, a mixed economy, partly enabled by wholesale CBDC. We'll come on to that in a moment. But Claudine, just on this RTGS point, do you think those systems are already CBDC? And to re-put Keith's question, if we simply upgrade the existing system so that payments are more efficient, perhaps with a wider set of counterparties to the central bank, do we need CBDC in the whole?
Well, CBDC is really a new form of central bank money. So what we really have to do is, primarily we need to see how our systems can be enhanced and how we can possibly inject some new technologies to make them more efficient. And to also, because CBDC is also a question of sovereignty of the money, of the currency, compared to, in the competitive world of international currency. So this has to be taken into account, and the easier, the central bank money can circulate, the better. So this is also why we need to explore this form of money. At the same time as we have to enhance and to improve our systems to make them more competitive. Perhaps the Eurosystem platforms are very efficient, but we have to think about evolutions in the future and the demand, and so this is quite it kind of converges to the same objective, which is efficiency and the anchoring of central bank money in the system.
Okay, Naveen, in the experiment we were talking about a moment ago, that's facilitated by wholesale CBDC. Together with a series of commercial banks. I didn't notice SWIFT in the diagrams. I think maybe that's the thing that goes and is replaced by a version of blockchain. So you envisage then that the payment system would be made more efficient by using new versions of public money backed up on a DLT system, I think.
So, John, my view is, again, to just extend what Claudine and particularly what Dirk talked about was digitalized correspondent banking. I think the innovation in both corridor networks and what we're doing with Partier, which is digitalized correspondent banking, is sharing ledgers. So if you think about the construct of SWIFT today, you have islands of ledgers of different banks, and SWIFT is the telecom pipe, which is synchronizing, simplistically speaking, the updates across these different ledgers.
Yeah.
You can do a lot on top of that infrastructure, but it's constrained by the fact that you have these islands of ledgers. Now, the novelty here is if you can get central banks to come together on a single platform sharing ledgers, or commercial banks to do that, that is where you drive a different paradigm in terms of atomic settlements, the ability to settle instead of sequentially all at once, which means that the amount of liquidity that you need to process a payment, that goes down. Atomic settlements is what makes FX payment versus payment possible and take out settlement risk. So I would say that the novelty in terms of replacing the infrastructure is shared ledgers. I don't think we need new forms of money. So I'm in agreement with Claudine and Dirk that the two-tier monetary system works really well. What is required is some of this innovation in terms of infrastructure, which gets banks to come together, whether it is central banks or commercial banks, to come together and share ledgers. Okay,
good. Let's explore DLT in a bit more detail now. We've had an audience questions about that as well. It looks like it'll solve all sorts of problems in finance, efficiently moving securities, money, tokens from one place to another directly with fewer intermediaries, instantaneously done and so forth. I mean, there are plenty of issues, though, that still seem to need to be resolved. The PBOC hasn't used DLT for its CBDC pilot, and has told us it didn't do that. It's a few years ahead, so blockchain might not have been in a fit state when they first conceived the program, but also they simply think it cannot handle the volume of transactions that would be implied by 1.3 billion people transacting on it. So there are questions about the robustness of DLT and the maturity of the technology. Do you think those will be surmounted? Is DLT robust? I've heard people saying that there are security flaws that would make it a risky technology for sovereign money. Maybe we can tolerate it for securities. So I want to explore those issues. We'll come back to you in a minute, Naveen, because your experiment involves some interesting applications here. But Claudine, sorry, I'll come to you in a moment. Aniko, you've done a lot of work on DLT. How robust is it, and do you think it is actually the answer for upgrading the payment system, including with sovereign money? Aniko's frozen, so Claudine, we will move to you.
Well, this is quite
you've got connection problems, Aniko. My apologies. We'll come back to you in a moment. Claudine, over to you. Is DLT fit for sovereign money?
So, I mean, it's a very. Oh, sorry, Aniko.
Aniko, I'll come back to you in a moment.
Thank you.
Sorry, I'll come back to you in just a moment. We had a connection problem. I'll come back to you in just a moment. Claudine, carry on.
So yes, I mean it's a very challenging question you posed, John. I think, frankly, this is a work in progress. I mean, these new technologies still need to be explored. I mean, regarding the experiments that were carried out by Banque de France, we were quite agnostic in terms of the technologies used and the different blockchains. So we used some various types of blockchains. We used some public blockchains, private blockchains that were customized for our experiments. What we noticed was obviously the efficiency of the blockchains to process the transactions, to have the information circulate and the assets to circulate in a tokenized way. Now some further work obviously has to be done to let's say stress the scalability of these blockchains. Regarding the controllability, we noticed that there was some value in having blockchains which can really enable the central bank to control the CBDC, which is an important feature that would obviously require from any new technology. But another aspect, apart from scalability, certainly would be to further reflect upon the security, to ensure that all the validating parties are well identified, that the chain cannot be broken by a third party, that we do not have different points of failure. All this has to be very, very securely, let's say, examined by the central banks before using these technologies. Also, perhaps one other aspect is surely the protection of the data privacy, and to determine which data can be safely circulate on the blockchain, which data has to be protected and how. And this is a lot to be examined. So maybe it's a bit early to conclude yet, also because the technologies are evolving. We see that regarding the consumption of energy, the new forms of blockchains enable to have less consumption of energy. This will probably change again in the future. So what we need to be is really to be alert and to test all the new technologies that come, that come on the market to adapt them to our needs, and before launching anything, of course, be absolutely sure that they are safe to have central bank money circulate on them.
Thank you. I know security remains an issue. I've heard talk of the proof of stake technology massively increasing the capacity of blockchain. So it is an evolving technology. But Anika, hopefully the connection's okay. Over to you on the robustness and desirability of DLT, specifically for sovereign money. We'll come on to capital markets in a minute.
So I would talk about DLT from a different angle. So here at MMB, we have developed decision-making steps for implementing CBDCs, and this has 7 distinguished steps where technology is the last one. So first, you have to decide on what is your primary objective by introducing the CBDC. And so to refer back to the People's Bank of China's approach, they have financial inclusion and they have market competition as primary objectives, and therefore DLT doesn't necessarily serve these objectives. And if your retail market is working properly and you want to improve the wholesale area, and you want to have specific actors having access to the system, and you are about to build a system for the future, which enables programmable money, which enables smart contracts, then most probably you will have to turn to DLT, which in itself is progressing rapidly, and all these scalability factors and environment factors are resolved very soon. So I would just like to refer to the ECB examination, where they had like 30,000 throughput per second, while using energy equivalent of 1 electric car's consumption. So I don't think that DLT itself would be really unsustainable from the energy consumption point of view. And what is really at stake is that if a single platform will emerge, when most of the central banks are betting for one platform, or there would be competing different platforms, but with reassuring level of interoperability in between them.
Yeah, well, a single global DLT sounds quite scary, I have to say, but we can come back to that. Maybe not. Thank you, Anika. Dirk, DLT has lots of interesting scope, and we'll talk to Naveen about the capital markets opportunity, all sorts of interesting capital markets opportunities for it. But we know in Germany in particular, people are worried about privacy as an issue with currency. But at the same time, we have the problem of solving for AML, KYC, and so forth. DLT was designed in many ways, of course, as a decentralized finance, to be anonymous in spirit, and there are people finding ways around that. Do you think that those things can be reconciled from a central bank point of view regarding DLT? Is it the right instrument from which you can compile transaction information without compromising privacy?
Oh, yeah, that's a very difficult issue. So I think we talk of wholesale. I would not like to talk on retail.
Yeah, forget retail for this panel. It comes up there as well, of course. But.
No, and I think for good reasons, we have a quite advanced level of regulation in capital markets. I do not believe the reason for that is because there are so many regulators looking for work. I think there are risks, and I think we have to manage the risks. And you asked the question, could we be a little bit more open with regard to securities levels for securities and not for payments? I think my thing is quite clear. If those are infrastructures of a systemic importance, I think they have to apply to the rules. I think we cannot level down the level of risk. So they might do that in a different form, but I think it is quite clear that the regulation has to be applied. And as you said, those things of anonymity, there's only very little room in finance, at least in my point of view, to do that. That being said, I think with regard to privacy, it's not needed. And I think that is always a little bit the wrong vision when you look, for example, at Bitcoin, where you have this pseudo-anonymous full transparency. That will not be the future. So I do not believe that we will see in financial systems, at least at broad scale, those systems. I think that will be permission systems. There will be a clear regulation. There will be a strict AML regime. I think some say, look, you are blocked the innovation because you with your regulation, you avoid that those innovative solutions come together. But I believe we are talking of finance, we are talking of systemically important infrastructures, core infrastructure of our society. And I think we cannot simply say that's not a problem.
Okay, but you don't. So you don't agree with the hypothesis that you could have a slightly more tolerant and open standard of safety for capital markets as opposed to sovereign cash?
I think it depends for sure on the segment. There are a lot, and you know that better than me, perhaps a lot of segments in the capital market where you have professional investors. I think we have to look what is really the risk profile and the effect. But I was also talking of systemically important infrastructure. So if you have really the big bonds, the treasuries, and I cannot imagine that here we could apply lower standards. That's DLT might be able to provide security in a different form. That is, but I think the level as such, the requirement is there, must also be fulfilled by those systems.
Thanks. Naveen, a very clear and interesting audience question about this with respect to capital markets. It's from Angel Gaviero, Managing Partner at AG Strategy and Partners. And Angel asks, at capital markets level, is not one of the big prizes to move both payments versus securities clearing together to DLT, i.e. D+0, which is drastic cut of counterparty risk, liquidity and capital consumption, which is basically what your experiment was about, I would say. How can CBDC enable it, is Angel's question.
Yeah, and maybe just to answer that question a little differently, right? Whether that is CBDC or whether that is a commercial bank digital currency like JPM Coin, one of the things that we found incredibly useful and gaining traction was our intraday repo product. The ability to do DVP for treasuries for tenors of 2 hours, for 3 hours, in terms of enabling short-term liquidity. This is something that with the infrastructure of today, we struggled with. Intraday repo as a product doesn't exist. So that is where we think having a multi-asset ledger where you have assets and cash on a single ledger and the ability to do atomic swap instantly and unwind in a very short tenor is useful in creating newer markets. And if you think about the potential for it, on a more broader scale, today so many of payments are executed on intraday line or credit extensions, which are unsecured and uncommitted. If you had access to these short-term liquid instruments, whether they are intraday repo or FX swaps, for example, enabled by DLT multi-asset ledgers, you could replace a lot of that with intraday liquid solutions. What that means is, as a treasury, the number of currencies that you need to manage, the liquidity that you need to manage, that changes dramatically. You don't have to manage liquidity in so many different currencies, knowing full well that you could leverage the short-term liquid markets. So I think that is where we find a lot of potential in terms of capital markets and intraday liquidity. And that is where we would like to leverage, along with our payment solutions, whether we are doing with Partier or whether with CBDC, these sort of instruments to provide that liquidity and liquidity solutions.
In short, you think you'd improve the efficiency of capital, the ability for capital to be deployed efficiently?
I mean, Dirk wanted to come in. I guess I'll give
please, over to you, Dirk, please.
No. It was just one reaction. I think I fully sign what Naveen has said, but I think are we really sure that the capital markets are liquid only due to the fact that we provide the technical solutions? So liquidity in the market is not always a function of technical possibilities. And I think that would also require really some further reflections. I think if we go to that area, and if we go to D+ now, D+ 0, owing to the fact that we do not need the reconciliation so we can check anything in real time, you must ensure that your internal systems are able to do that. And with regard to the markets, you must ensure that they are liquid at all circumstances. That, I think, is an issue which also deserves additional reflection.
Okay, thank you, Dirk. Just a request: the audience do still vote in our poll. I'm going to reveal the result at the end. See if there was any change in attitude to transforming our payment system all in one go. So do vote on that. I want to move to corporate treasurers. We talk about retail a lot. We talk about banks. We don't talk about them, and probably should. Do we expect either new versions of money, including the sovereign that we've talked about today, or new payment infrastructure, let's say stable coins, to enable corporate treasuries to transact bilaterally without commercial banks? That's taking the structure you propose, Naveen, even further to not include JP Morgan in this instance. Which brings a whole load of efficiency benefits, but also headaches of the regulatory sort that Dirk was talking about. So do we think that's where we're going to end up? Over to you, Aniko. Do you see treasuries, corporate treasuries, transacting bilaterally without having to use the banking system, for example?
Well, thank you for the question, and I would definitely refer back to what Dirk said a couple of minutes ago, that the system is not only consists of technology, but it consists of governance, regulation, entry criteria, AML, KYC checks. So for that, we have the two-tier banking system for the moment. But if you want to have additional participants, the complexity will increase extremely, and still you will need a gatekeeper to check the capability of all participants, that they will be able to transact, and they will be able to execute what they promise. So in this vein, I think that for the foreseeable future, we will need the banking system to provide this professional layer, and there can be one or some dozen big companies that can be added to this club. But overall, I don't think that we would move to this direction.
Okay, thank you, Aniko. In summary, I think the answer is basically no. Claudine, Aniko's breaking the hearts of the DLT revolutionaries here, and we're reminded that banks don't just generate credit, they do sorts of other things in the regulatory system. Can you see corporate treasuries transacting bilaterally without banks, and somehow the information ending up with a regulator or central bank so that it can be overseen?
Well, it's very hard to predict the future, but really, as we reflected upon the CBDC, I mean, basically, as I mentioned before, CBDC is just another form of central bank money, and I think it's quite important that the equilibrium in the ecosystem is maintained, and also, I mean, for the one major focus of the regulators is, of course, the financial stability. So either by regulation or by carefully devising our project for the CBDC, we have to make sure that the financial stability of the overall system is not disrupted. So I think it's a very early stage at this moment. I would not see that happening, I mean, in the short term. And this is well, one aspect of the whole the whole piece that has to be further explored.
Now, thanks, Claudine. I'll come to you last, Navi. Very keen to hear from you, of course, on this. Dirk, I'm not hearing wild enthusiasm for the disintermediation of commercial banks on this topic. Would you share that view?
Yeah, if you ask me, yes, owing to the fact that banks play an important role in our financial system, and cutting them off and moving anything to CBDC, I think that would not be a wise solution, if you ask me. But that being said, I think there might be different ways to make transaction processing more efficient, but without breaking down our well-established financial system. And that will be the key challenge which we have to address.
I meant something different, I suppose. I meant whether, let's say, BMW might be able to buy spark plugs from Bosch using DM without anyone knowing about the transaction at either a commercial bank or the central bank.
So, but the point is, DM will be, at least in my point of view, and I have very strong sympathy with the US, I think that should be regulated as a bank.
Right.
So then we are immediately in this direction. So I believe that is quite clear. Those stablecoins would also have to apply to such a strong regulation, and therefore I believe that should not take place. And I just wanted to say, I think we had a lot of discussions in 2008. All the corporates were coming to the Bundesbank and the central bank saying, please give me an account. We need central bank money.
Right.
Because so I think that is extremely sensitive, and we must be very careful when we go into that direction. I fully understand that a lot of people say, look, what is the problem? BMW, Siemens, peer-to-peer, everything is fine. No banks, no central banks. But I think the real life is a little bit more complex.
Yeah. Okay. Thank you, Dirk. Naveen, final word to you on this. You, of course, have a dog in the fight, as they would say. So we might be able to predict your answer, but I know you'll express it articulately.
So, John, I mean, I couldn't agree more with what Dirk had said, right? In terms of the two-tier money system, that working well. But I mean, we speak to corporate treasurers all the time. What we think all of this infrastructure modernization or revamp would do is it allows corporates to maintain what we call universal bank accounts. Right now, the world of the corporates is that you have many different bank accounts, many different regions to manage local liquidity pools and cash constructures. If you have the ability to reach multiple geographies at will, instantly with FX, what that means is, from a corporate treasurer, you can manage your liquidity in a single currency or a single set of, or a narrow set of currencies, narrow set of bank accounts, and in general, drive a lot of corporate treasury efficiency. So that would be my take in terms of what it means for corporate cash management.
Okay, well, that's a very good answer on liquidity. So I'm going to conclude now. Thank you very much. A very interesting and important set of topics. The audience is a little bolder than we are, so they think, and didn't change their mind really during the session. 72% of the audience by the end is in favour of a wholesale change of the entire money system and capital market system to DLT now. So versus 28% who said no. So I think there's enthusiasm out there, albeit probably the more they hear about the issues, the slightly more circumspect they might become. But thank you very much, everyone, for listening. Thank you for the excellent input from you as panelists, and we look forward to seeing you again soon. So thank you very much. Goodbye, everyone.
Bye-bye.
Thank you.